Everyone, and welcome to the Hot Housing Trends webinar. My name is Marissa Smith, and I'm with the Alumni Association. Thank you so much for joining us for what I'm sure will be a very active and engaging conversation. Before we get started, I want to share just a couple of announcements with you. So first, a couple of tips on how to use Zoom. So you've most likely joined today's webinar using your computer, but we do have the option to dial in over the phone, and instructions are displayed on your screen. And they're also in the confirmation email that was sent to you. And we do invite you to ask your questions during our panel conversation today. And you can do so using the Q&A feature on your taskbar. Our webinar series is brought to you by our Alumni Association members. Members power everything that we do, and we're very grateful for our member support. If you're interested in becoming a member or learning more, you can do so at umnalumni.org/membership. And if anybody joining today's conversation is already a member, just want to say thank you for your support. Alumni Association members are automatically a part of our Maroon and Gold Rewards program, which is our member benefit program. And there are a ton of really cool and unique member benefits, including things like 20% off at the bookstore, exclusive discounts at a variety of interesting places. And I'm really excited to preview one of our newest member benefits, which is the Gold Legacy Home Program. And when I was re-reviewing the Gold Legacy Home Program last night in preparation for today's conversation, I was again blown away by what an amazing deal this is for our members. So you're going to meet Tam and Trey in just a moment when we start the panel discussion. They are at the center of the Gold Legacy Home Program. And what they are offering Alumni Association members is a very generous discount off of your closing costs when you purchase a home with them. It would pay for the cost of a membership again and again and again and again. So if you're thinking about the home buying or selling process, and you're connected to the University of Minnesota Alumni Association, the Gold Legacy Home Program is here for you. And I'm sure more details about that will come up during today's conversation, but I just had to give a big plug to that right off the bat. So at this time, we're going to dive into our panel conversation. We have a team of experts here to guide us through this conversation. They're going to introduce themselves. And at this time, I'm going to turn things over to Tam Langen. Thank you, Tam, for being here today and facilitating our panel.
Hey, thank you for having us. And I say too, yeah, you get such a good deal. You should be life members of the Alumni Association because you get an even better deal then too, right?
I know, I was doing the math. It's a 10% discount rate on your closing costs if you're a member, and a 13% discount if you're a life member.
Yeah,
and it's really easy to become a life member too, because we have a payment installment program. This is what I chose to do. So it just comes out of your bank account every month. You don't even think about it, and then it's over before you know it, and you're a life member and you're set for forever.
Yeah. No, I think that's so great. So I'll introduce myself. I'm Tam Langen. I'll be your moderator today and a panelist. So I'll jump into the conversation, but I'll also be the one looking for questions. I'll check the question and answer box. So definitely encourage you, if you have questions, we'll be answering them live. We'll start in on some questions that we've thought might be important to talk about right away. And then feel free to jump in, ask us some questions, and we'll answer those. Trey Scott and I are the official housing partner for the University of Minnesota Alumni Association, and we're so grateful to have this opportunity to partner with them. They really are just a fantastic organization. Their leadership is wonderful to work with. I've had the honor of helping people buy, sell, and invest in residential real estate now for 7 years with Keller Williams here in the Minneapolis Metro. I am a veteran myself, so with that, of course, I'm an advocate for military housing and using the VA home loan benefit. I'm a property investor myself, and then of course, I invest in other residential real estate related businesses as well. I want to hand the mic over to Trey. There's Trey. Why don't you introduce yourself, Trey?
Hey, hi alumni. My name is Trey Scott, and I'm with Keller Williams Realty, and I'm a part of the Gold Legacy Home Program. I've been a real estate agent for over 11 years. I've also been into investment, specializing in investors and luxury properties. I'm also part of our leadership. So I actually coach other real estate agents in their businesses and dealing with their clients just like you. And I just very passionate about, working with all of you, with Tam and our new program. And we're excited to just be able to experience this journey with you and helping you with your home selling and buying needs. Oh, and
Dave.
now, sorry, I'll hand it over to Dave from TCF Bank.
Well, thank you, Trey. Appreciate it. Thanks, Tam and everybody today. Welcome, alumni, and we're glad that you're participating. My name is Dave Petrosky. I'm a mortgage loan officer with TCF Home Loans, TCF Bank, and I have been a loan officer north of 20 years in the Twin Cities here. So I think you could say I'm still getting my feet wet in the industry, but I've worked with thousands of home buyers and thousands of people who have refinanced over the years. And really, it's just a great industry to be in. And we're certainly really proud to be working with the Alumni Association here today, and certainly proud to have our TCF logo on the bank stadium. And we absolutely love that and appreciate the support that we give to the university. With that, Tam, I'll turn it back to you.
Thanks, Dave. Doris, why don't you jump in? Tell us who you are.
All right. Well, good afternoon, everyone. I'm glad you guys were able to make it. And thank you, Tam and Trey, for allowing myself to join you today. I'm excited about this. So my name is Doris Hentges. I am a very brand new partner with Frayling Anderson out of St. Louis Park. I have been with Frayling Anderson for 12 years now, 13 years, and I became their third female partner on January 1st. So big deal, really big deal. We've been around for 75 years. This year we're celebrating 75 years in business, and we're proud of that and what our firm does. We started our journey back in 1946. And what we do is we provide our clients with business consulting, tax and audit, and accounting services. Myself, I help mom and pop shops up to large family-owned businesses. And our firm firmly believes in putting people before the numbers. It helps us create lasting relationships and makes us their trusted advisors instead of just the people that they have to go see once a year. In that approach is what has for 75 years, allowed us to deliver high standard and quality to our clients. And with that, I'm going to send you back to Tam.
Thanks, Doris. So I think I just wanted to say, first of all, thank you all for introducing yourselves. I appreciate you guys taking the time, the planning that went into this, and especially during our busy season. I think I know Doris is in her busy, we're all in our busy season. So I just want to thank you for taking the time to share your knowledge and your experience with us in this unique market. I think market updates are always really helpful, but this one is unique right now, right? Something I haven't experienced, Trey hasn't. Dave, you've been around a little longer. Not sure if you've experienced something quite like this. So now is really a critical time in housing. I think, markets can be hyper local. I think we can all agree that on a global scale, certainly on a national level, that this is a critical time in real estate and how we're doing business. Interest rates are low, inventory's low. We have more buyers than we do homes. I think I read something recently that said we have more real estate agents than we have homes for sale on the market right now. So that's a funny one. And so add on top of that, in the last 12 months, the pandemic crisis that we've been in, and how has that shaped and changed how we do business and where people live? And then that, of course, changes our national demographics and the economy, where people are spending money. So let's jump right in, talk a little bit more about this. We're going to answer a few questions right out of the gate that we think are important. And then anybody watching, feel free to jump in, ask any questions in the chat box or in the Q&A section. I'll be watching those and sharing any questions you guys have, and we can talk about them as we go here. So feel free to jump in. Trey, let's start right out of the gate and just say, what does the housing market look like? If I was going to ask you that, what do you say?
Well, that's a great question, Tam. It is definitely a seller's market. Like you said earlier, there's low inventory. We're getting multiple offers from buyers because of the low inventory right now, and the interest rates are very low. And so right now we need more stock, more inventory. So anytime that we have any sellers out there that's considering selling, right now is the best time to do it, because there's been offers, and you've seen this in your business, Tam, they're
Mhm.
going 10, 20,000 over asking price right now, just
Mhm.
because of the lack of inventory and so the demand of the buyers right now. So definitely a seller's market. Hot
Yeah,
for
so yeah. Yeah, on the sales side, we see this on the front end. We're writing offers, we're seeing these things play out. How do we win those offers? We're going to talk a little bit more about that in a little bit. And then I'm really happy that Dave and Doris are here because we're having more complex conversations with people because of the state of the market here in Minnesota. But certainly, like I said, this is really a pattern that we're seeing everywhere in the nation, right? Low interest rate, it's really supply and demand with an inventory that's really driving some of that. So we're going to touch on some of that stuff and having Doris and Dave here to talk about the details of some of those things, because those are conversations that we're having to have with our clients, you know, before they're jumping into the housing market. So let's talk a little bit about that. What was that, Trey?
I was going to add to that too, Tam, because of the low inventory and we don't have a lot of sellers out there with properties. We're getting to feel the buyers, just their anticipation, even their frustration, because now they have to look for temporary housing. They have to find somewhere to go. They're always in competition with others. And so right now, when we say it's a seller's market, meaning sellers, let's get some inventory out there for these buyers so they can have some homes this year. So that's what I mean by the seller's market.
Yeah, no, I think that's such a good point is, we're going to talk a little bit more about that in a little bit. How has the pandemic affected the inventory? Some of that, we know that we missed 7 years of new construction building previously after the recession. And we see this incredible boom in new construction, despite, restrictions from COVID that's related to the pandemic, but we're seeing that market just skyrocketing in new construction. So hopefully that starts to give us some more of that inventory as it turns over into resale inventory. But right now, even the new construction markets really really pressing themselves to add inventory to the market, just so that we can offset some of the supply and demand. I wanted to talk a little bit too, because like you were saying, Trey, people are having to find secondary housing. They're having to figure out, where can I come up with some extra cash, right? Because we're starting to see what do mortgages look like when you're purchasing a home, when you're a buyer in this market, and you need to be competitive because you're competing, you're over list price, you got to pay your closing costs, maybe you need extra funds for different things. Dave, what are you seeing in the mortgage side of things as money pertains to this when we're writing offers? What kind of conversations are you having?
Well, the conversations, Tam, that we're having with people right now is we're trying to make sure that they're well prepared and they're prepared in advance. We're having these conversations to almost act like a psychologist for people, because there's going to be a roller coaster of emotions that are going to go forward here with people, and they need to try to be able to, take the emotional part of it and literally put it on the sidelines if they can for a time being. We know that buying and selling houses is in a very emotional time for people. And so it's really important to have those conversations to give people an understanding of what to expect in the market and to how to react to it as best they can. With regard to, your comment about the cash, that's really becoming almost a more critical part today than we've seen in the past. Trey had shared with us that in the buyer's perspective, they are now looking and seeing where they're going to have to start writing offers 10, 15, 20, even 25, thousand potentially, or percentage points over what the list price are. And it's a competitive environment. And people are finding, as you mentioned, with low inventory, they really are becoming more aggressive. The flip side of that is that when they do make that offer on the house, they have to be prepared for what can happen with an appraisal. And that's really what the main conversation is all about. So as we know, in many cases, and some people may not be aware about this, financing is based on the lower amount of the appraisal or purchase price. So if we bid, for example, $350 on a house and the appraisal comes in at $325, the buyer has choices to make. And one of the choices is, in order to keep that purchase going forward, they're going to need to make up that difference in cash. And so people may not have that cash available. And now it becomes an issue where their purchase may fall short because they can't meet the needs of that. So we really want to have those conversations and let them know what those surprise numbers potentially could be, and that they are aware of that. And I know that's part of, from the real estate perspective, that's part of those conversations as well. So we're all kind of working together. We're working as a team to help that buyer navigate those types of questions and those types of situations in this environment.
Yeah, Dave, I'm really glad you brought that up because the appraisals certainly become an issue. We're in Minnesota, we have seasonality. We come out of a winter market, we have less comps, but this is, like I said, it seems like it's a national thing. So we're having to have these complex conversations before we write offers. Are we going to do an appraisal guarantee? If the appraisal falls, doesn't hit the number that we need it to hit, what are we going to do with that? So we're seeing some appraisal guarantees being written into the offers. And if you don't know what an appraisal guarantee is, it's just like what Dave said. It's on the front end, when you write an offer on a home, you're agreeing with the seller that you're going to pay some amount of the difference if the house doesn't appraise. So where I think this becomes really important in the conversations I'm definitely having to have with my clients about closing costs and appraisal differences or larger down payments is, where does that money come from? Can it be gifted to me? Where can I get it from? Can I pull it out of a retirement account? So these are the conversations that we're having, and why especially we brought Doris on. She's got such good insight because these things on the back end affect people, and we want to make sure that we're taking care of people that are purchasing and selling by having these conversations on the front end, because of course there's implications a year down the road, right, Doris? So that's a great one. If we're writing these offers, we need closing costs. We might need an appraisal gap. We need higher down payments. Doris, what are the implications? Where might people grab that money from? Retirement? How does that show up for them after they've bought the home?
Well, you have, there's options as far as, like it's mentioned a few times, taking money out of retirement. If you need the down payment, you need the cash. Obviously, it's a route you may have to take, but there's tax implications to it. How old are you? Are you under the age where you can take a distribution? There's 10% penalties if you're under, 59 and a half before you take a distribution out of your retirement account. And you're talking big dollars. If you take out $50,000, you could end up with a $5,000 penalty. And so not many people want to have that. There are a few IRS rules that they do allow people to take out for first-time home buyers a certain money or amount without penalty out of a 401k or a retirement plan. You would have to look into what plan you have and to see if it qualifies out of that plan. But there's that opportunity, but there is tax implications to it, and make sure that you look into that before you make that decision. So.
Yeah, Doris, I love that. I think this really comes down to another piece, right, is our sellers. So our sellers that also need to buy right now. One of the big things that we're seeing is that our move-up buyers, our downsizing consumers, they really can't be contingent on the sale of a home. That's a really tough market to be in right now. So we're seeing a lot of buyers who need to also, buyers who also need to sell. They have the equity in their home, but they can't use it unless the home sells. And we're having a hard time getting them a home if they haven't sold the one that they're in already to use that cash. So we're seeing them start to reach out to different areas to get money for down payment, so they can be a non-contingent, so not contingent on the sale of their current home buyer, and then replenish that money back once their home is sold. But there's implications to that, right, Doris? And
well, but you have, if you choose, it's a timing difference, but if you choose, you can take money out of a retirement plan, like an IRA. A 401k all depends on what your job allows, what their plan allows. But out of an IRA, you can take a distribution, but you have to, in order for it not to be non-taxable, it has to be rolled back in within 60 days. So if you have 60 days that you can take that money, sell your house, take the cash from your home sale and pay that loan back, it's tax-free. So the way
I
to
love
go
that you're saying that. Yeah. These are the conversations we're having. They're complex conversations that we haven't had to have before, because we could list a house for sale, help, and then purchase the next one, close on the same day, that kind of stuff. So we're seeing these different types of conversations where you definitely want to have your accountant at play, your mortgage officer, and your realtor. I mean, it's a team effort when we do these things. I had a question come in. I've got two other ones that popped in here too. This one looks like a good one for you, Doris. What's the capital gains tax rate on home sales? Is there any way to avoid or reduce capital gains Or is there anything that might change about capital gains that we need to know about?
So primary home, no capital gains on anything below 250 for single and 500 for a married couple. So you have that first exemption when you're selling your primary home. Primary home means that you've been in there 2 out of the last 5 years. Okay. So no capital gains on that unless you make more than 500,000 on a married filing joint return, which kudos to you if you do. That's great. But second home. So I have a client right now that sold a second home in 2019 or 2020 that we're dealing with right now. So capital gain rates, you're sitting at 15 or 20% of the gain on that, which obviously your gain is the sale minus any of your costs and any of your improvements to that property. Historically, those are phenomenal rates. We've had those for about 10, 15, or probably about 15, 20 years. And now we've had these capital gain rates. But there's a fear that they may go with the new administration. There's a lot of talk that capital gain rates may disappear. If they disappear, it will be at a threshold, and what we're seeing is $1 million of adjusted gross income, which is going to take a lot of people out of the equation of that, and they should still have the lower capital gain rates. But if you've got somebody that's selling a house and, you know, maybe is still working and has really good investments and is still hitting those levels, you could hit some higher capital gains. So, and the capital gains would be at ordinary rates, which ordinary rates are anticipated to go up to back to Obama era levels. So
yeah, I think that's a great question. And Trey, you can jump in here too. I'm definitely seeing, I'm sure it has to do with the pandemic and how people are spending their time. We're seeing more people selling secondary homes or purchasing new secondary homes. Maybe it's in a different location. I saw a huge shift towards lake properties because people were spending more time at home, more time outside, buying cabins. I certainly saw an influx in that as well. Some people jumping in perhaps with the investor market. So we're seeing a lot of movement. Trey, would you agree with that? So we're having these capital gains conversations.
Yes, I agree with that. And also, you know, because of COVID, you know, more people were able to stay home and work from home, and they already had lake homes. And finding out that this is more of a long-term thing, they decided, well, I might as well just move and get my new lake home because I can work from anywhere right now. And the same thing too is if you think about it, as we were shut down, their goal was, I need to create an environment around my home to have a life or to have freedom that we don't have. And so a lot of people moved because they wanted their kids to be able to go outside to the lake or run around outside in the yard and give them that. So so we've seen a lot of change of just lifestyles of people wanting to, I'm going to enjoy vacation right now or go somewhere fun and just do it right now because I can work from anywhere.
Yeah, absolutely. I think I want to jump in here too, since we're having kind of a lot of these like shifting secondary home type conversations and questions. I had a question come in. Is the capital gains tax rate threshold on 250,000 home price or 250,000 of income? Doris?
It's the gain. So if you sell your house, let's say you bought your house and you paid $200,000 for it and you sold it for $400,000, 20 years down the road, you have a $200,000 gain. It's the gain. And so it has nothing to do with your income level. It has to do with how much that gain on the property is. Now, depending on what your income is, you can hit, there's a 15% capital gain and there's a 20% capital gain. And the 20% capital gain hits when you hit the 37% tax bracket. So,
yeah. No, I appreciate that. I know we're talking quite a bit about the secondary homes or having a secondary home and then making that your primary home as we're seeing shifting, or selling a cabin, selling a primary home, and then moving further out from urban areas to a lake home or something like that, or something with a pool or something near parks or something where people are spending more time outside or they need a larger home, right? So we're seeing some shifting with that. Dave, can you jump in really quick and just chat about, like, okay, let's say they are purchasing a secondary home. That's a little bit different of financing. Can you briefly give us a little bit on a secondary home purchase or an investor purchase? Because we're seeing a lot of that movement too. What do you think, Dave?
Yeah,
cash they need.
Yeah, from a standpoint of, it really comes down to down payment percentages. The down payments are are increased when you're dealing with secondary homes and when you're dealing with investment properties. So typically you've got low percentage down payments on primary residence, and then those percentages start to increase when you get into second homes, and then they're going to increase even further when you're getting into single family investment property, and then there's going to be a jump when you're getting to 2 to 4 unit investment property. And for those of you that don't know, 4 units is the max for residential financing for investment property. Any unit or any project that's more than 4 units, it then jumps into the commercial space, which is a whole different lending types of process itself. One of the things, Tam, I wanted to bring up real quick in talking about investment and secondary homes, which you may not have known, this is just a recent announcement. The majority of mortgages end up in what we call the bond pool for Fannie Mae and Freddie Mac. And Fannie Mae and Freddie Mac are really the ones that set the underwriting guidelines and the loan sale guidelines that's going on across the board. Last week, there was what I'm going to call kind of a quiet announcement that Fannie Mae and Freddie Mac are now going to make adjustments to the amount of secondary home mortgages and investment property mortgages that they're going to buy. Right now, it's been about 13% of their overall portfolio is made up of second home and investment. They're going to be dropping it to about 6 to 7%. And what that means is there's going to be adjustments in the costs of those mortgages that Fannie and Freddie are going to be pushing forward to the lenders, which therefore are going to be pushing forward to the consumers. So it's not been defined yet what those adjustments will be, but the reason for those adjustments is Fannie and Freddie are really concerned due to COVID that there may be employment challenges for people long-term that may no longer be able to meet their mortgage obligations. And when people start looking at that and they need to let something go, the tendency is to let go a second property or an investment property before they let go of their primary residence. And so that's actually going to be strategic. So we're going to see some adjustments coming forward here in the next month or two on financing for second homes and investment properties.
Yeah, no, it sounds like they're going to get more expensive. The cost of obtaining those loans is going to be more expensive. That's my job, right? I'm supposed to bring it down, simplify. We had another question come in here too, and I think it applies to primary residence, secondary vacation homes, that kind of thing. Are people getting more concerned about rising mortgage rates or rising interest rates? Dave, or Trey, what kind of questions are you guys getting those questions?
Yeah, I think people should be aware of it because it's a legitimate fact right now. The home affordability index right now is elevating. And the reason it's elevating is not so much because of interest rates, because we know interest rates are at historic levels, but the costs of homes have been elevated so much. So if you've got people that are looking at homes at a certain price point and they're now finding either little to no inventory, their natural reaction is to move up to those next price points. And now that affordability index is starting to go up. And that is going to also start to create challenges, Tam, like you had brought up earlier, making either contingent offers or non-contingent offers in today's marketplace.
Yeah, so it sounds like, and I'm in agreement with you too. I think, Trey, I think we would all agree that, the mortgage interest rates, they can't stay this low forever. They're going to come up. And then what happens as mortgage interest rates come up, inflation is going up. How does that affect the market? So those are real conversations as we're projecting forward what is going to happen in the market. That's something to be ready for. It's why we see, Trey and I are seeing, all of us are seeing this flurry of buyers to purchase because the rates are so low. It costs a lot less to have that loan over time with these interest rates as low as they are. So absolutely, it's a conversation. It's something to pay attention to for sure. And it's part of why we see this move for people to buy homes. And then we just don't have them. I wanted to ask, there was a question that came in here too. We were talking about appraisals a little bit ago. Do you recommend foregoing the appraisal contingency? It seems like winning offers are those with no contingencies. Trey, what do you think? And then we can talk a little bit too about foregoing the appraisal contingency. Is that even an option, Dave?
Yeah, so in my experience, we have been seeing a increase of offers with no contingencies, waiving appraisal, waiving home inspection, quick close, because that's just how competitive right now the buyers are in the market and the lack of inventory. I always advise, first my clients to have contingencies to protect them,
Mhm.
especially the appraisal, and because you have to educate them that they're in a scenario that if it doesn't appraise with some loans, you have to come up with the cash difference at that appraised value over that. And Dave, you might want to add to that on the loan side about that as well.
Yeah, and you're absolutely correct, Trey. It's an appraisal, the comment about the waiving the appraisal contingency has nothing to do with an appraisal actually not being done. An appraisal will be done on every single home purchase. And that the appraisal is for the lender, because the lender's financing is, as I mentioned earlier, is based on the appraisal and the purchase price. And to Trey's point, you'd mentioned that, yeah, if that appraisal is short or not as high a value as the purchase price, the homeowner is going to, or the purchaser is going to have to make the decision. Can they make it up? If they sign a contingency that says, yes, no matter what the appraisal is, I will make up the difference. Well, that's a cash out of pocket question. So if they've got the cash to be able to make that happen, okay, great. Then you've given yourself a little more flexibility in being able to make the transaction go forward. And as Doris mentioned, you may need to use other funds, where it be from a gift from a parent or a relative, or it's going to be funds from a 401k distribution. The other part of the waivers, which I'm actually really curious about, Trey, and your opinion on this, which to me is getting more into the danger zone, is we are noticing that some buyers are actually foregoing an inspection. And I'd really love to hear your feedback and your comments about the risk factor for a buyer who is absolutely making an offer to do that. And if a buyer actually asks you your opinion about wanting to forego an inspection.
I always advise to do inspections. Okay. Yes, it's always the buyer's decision, but as a real estate professional, I know Tam agrees. Our representation, our fiduciary duty is to protect the interests of our clients. And those are there in place to protect those interests of our clients in a transaction. And so we educate, we advise what we think is best for them. Of course, they make that decision. And even so, we've seen where buyers will show up at showings or appointments, and they may have a contractor or they may know an inspector that walks through with them before then if they're thinking about waiving those inspections. And so they're now starting to be more smart with still in some way, I want someone to take a look with us before we make that final decision. But Tam will probably agree, I always still advise the best interests of our clients first, especially when it comes to inspections.
Yeah, I mean, it's certainly on the listing side, right? If I'm representing a seller, of course, the sellers want the least amount of contingencies as possible. And that's just to get them into pending faster. They might need to write an offer on a house. They need to get through so they can also purchase. And some of the ways we can remove those contingencies, but with a safety for the buyer on the buy side, is to have the inspector out before you write the offer. Or have it scheduled when you write the purchase agreement. All of these are different options in order to remove the contingency, but still have the safety in place. Again, these are really prepared, complex type of conversations we didn't have to have before. But absolutely, I'm with Trey. I mean, we definitely have to recommend that you have your own inspection, which is a great question. I want to touch back in here too, if that's okay. And if an appraisal comes in below sale price, other than coming up with the additional catch, what other options are available to them? I can hop in and mention there too. I mean, you can renegotiate with the seller and see if the seller's willing to come down or meet you in the middle anywhere. It becomes this point of negotiation if you don't discuss it on the front end, right? Is the seller willing to meet you somewhere? Are they going to come down on price? Is somewhere in there. If you have closing costs, are you willing to forego those kinds of things? So it's a point of negotiation. And if you can't reach an agreement, then you cancel the purchase agreement. So we do see more offers, what we call falling apart, because of things like this. And certainly on appraisal, it's become one of those things. So there are options. It becomes a negotiating piece. If you know what position you're in when you write the offer, you can be a stronger buyer if you know that you have the capability to do an appraisal guarantee on that one. Can we jump into advice for first-time home buyers on how to stay competitive without waiving inspections, paying all cash, or going $10,000 or $20,000 over asking price? Trey, do you and I want to chat about that a little bit?
If I had that advice perfect down, then I'll have more buyers under contract. It is very competitive. I want to be honest to our first-time home buyers. It is very competitive. That's why, buyers are coming stronger in with removing those contingencies. I would say I have one, and I know Tam has one, offers based on how we represent the offer to the sellers, to those agents, our influentials, and just be able to show them that we're willing to work and get this done as quickly as possible with less stress on their end for their seller, and we'll get it done. And so it's not just the offer or the number. Sometimes it's who is doing the work for you, who's representing that offer and giving that over to the seller. Because Pam will tell you, there's times that we may be with multiple offers, and we will get on the phones with the other agent, with, finding out the seller and how can we make this work? How can we win over the other multiple offers? And so it's about who represents you and who's going to work to get you one, to get that offer accepted for you.
Yeah, I think now more than ever, it really matters who's on your team and how prepared are you? What kind of conversations are you having? If I'm allowed, I'm having conversations with someone like Doris for my clients. Dave is definitely calling the listing agent when I write an offer. I'm definitely building rapport with the listing agent when I'm writing an offer. So there's so much to presenting offers, writing offers, leaving feedback, because we know that in markets like this, we've got a lot of players coming in. I don't want to get too high level in real estate. We have a lot of players coming in that don't do real estate the way that a traditional realtor will do real estate. So it's really about the communication, the trust, the team that's participating in communicating about those offers, and then getting the sale, getting the client to closing. That's not a thing we talk about a lot. There's a lot of work that happens on the back end, and certainly in markets like this, they fall apart. So for a listing agent, when I'm working with one of my sellers, I say, what's the likelihood that this thing is going to get to close, like you said, Trey, with the least amount of hassle and in the time that we want it to get into? So having someone like Dave on your side, the lender matters, your real estate agent matters. How are they having conversations and preparing you on the front end? So when these things do show up, you're not surprised. It's not horrible. We have solutions already. So I think that really matters. Dave, you can probably jump in on how that part of being competitive really matters. It's not just the terms of the agreement.
Yeah, it is really important, Tam. And we talk about real estate, for all intents and purposes, is still local. And we've seen an influx of internet-based entities that are trying to crack into the market and provide, and offering up deals or offering up incentives or offering up whatever to consumers to try to get them to jump on board with them. But at the end of the day, I think your comment was really good. When you're representing a seller and you're looking at various buyer offers, we continue to hear that if that buyer is working with a local lender, that everybody feels better because we know who they are, we know who they can call. We're not calling 1-800, we're never going to call you back. It's just, you've got that hand-holding type of experience that local people can help everybody with, and it just makes everybody feel a little bit better. It makes all the professionals in the transaction feel better. It makes the consumers feel better, and that way, as you said, Tam and Trey had echoed, it's getting from offer to the closing table in a reasonable period of time with the least amount of hoops and the least amount of drama. And everybody wants to get there without challenges. And that's where I think, having local lenders and having local real estate agents helping consumers is really a benefit, because they know the market, they know the players, they know the individuals. And it's really just a way you can get from A to Z with the least amount of headaches for everybody.
Yeah, and Doris knows this stuff, like, compliance, regulation, her world's always changing, but we know it's different in every state. So it really is important to have someone who knows what's happening hyper locally, when we mentioned that right when we started here. Even though there are trends that we're seeing on a large scale, but it certainly is local, because there are things that are changing all the time. I don't know how Doris keeps up, honestly. I had a question come in. What are the primary factors in the reluctance to sell right now? So I was like, I can jump in here a little bit. We do see, I mean, we see COVID certainly playing its hand in sellers not wanting to list their homes. We're seeing some people just stay and refinance because they don't want to jump into the competitive market. So it's hard to be a first-time home buyer. It's really hard to be a buyer who has to sell their house too. So we're seeing some of them just kind of waiting. They're pausing a little bit. They're comfortable with, even if the mortgage interest rates come up a little bit, they're still very low, still great time to move. So we're hoping that as vaccinations roll out, as certain restrictions start to lift, that we're going to start to see some of those sellers who are move up or move down, downsizing, moving up, buyers that have been holding in a holding pattern, we're going to start to see some of them move. And then we'll get a little bit more of that inventory. And certainly the move up buyers will give us some of that first time home buyer inventory as they're moving up into the secondary homes, like the ones being built for new construction right now. So that's certainly a reluctancy I see, is not wanting to jump into this competitive market. Certainly they got a lot of stuff, you know, they might have kids, there might be schools, there's a lot of things at play. So COVID, I've definitely seen, grab some of that and hold on to it until it starts to lift. And I think we'll start to see some of that coming back in the inventory. Trey, what do you think?
Yeah, I agree with that. And that's why, even when I have a seller that is reluctant because of the buyer competitive market of finding another home, the first thing I would do is connect them and make sure they have that conversation with Dave, because what I'm finding out is that there are some sellers that can afford to go ahead and buy that house and then can sell it, and they don't have to have that contingency of selling a home based on, their case by case financials.
Yep.
So there's a lot of different options that will take that, that reluctance off of a seller, but they just have to be linked with the right, lender that will explain the options to them clearly.
Yeah, I want to touch on that. This is also a question someone had too, which is having the conversation. We've talked a little bit about this. In this kind of a market, you really got to have the right team. It's all about communication. When do we start having those conversations? So someone asked a question. As someone who's looking to rent, or that's renting and looking to buy, when would be the best time to start, getting started in the home buying process? If your lease is up at a certain time, what's a good first step? Those types of questions. When do I start having the conversation? Or like another person said, we'll kind of answer this as a whole, Trey, I think, how important it is to have the right team, to successfully purchase a home especially in this market. I mean, it always is that way, but it really is in this market. With that in mind, how, do you have any advice on how to choose a realtor? So I think some of these things is, when do we have the conversations and who do we have them with? What do you think, Trey, or Dave too, jumping in on that?
Now, I would say when it's a thought. And the reason why is because, there's some education that needs to be done, especially when it comes to, not just a location, but where in the market, what's your price range, And so what I do with my clients is I take the time to educate them first, and it could take them some time to really get to figure out what they're looking for, what's important to them, where they want to be, what is their price and budget, and to make sure that they're confident in their decision of what they're buying. And that's important to me. And so if you're thinking about buying, contact us, because we will start the education process. That's why it's called a home buying process. Not, I'm ready, let's go. It's process for a reason, because there's a preparation and education to get you to make sure you're getting that right home for yourself.
Yeah, and I think so much of it has to do, for our first-time home buyers, it's one thing. And for our complex buyers, they own a home. We need to start having conversations. I always say it's never too soon to just start having the conversation with a mortgage officer. And certainly our complex buyers who can't go non-contingent, or maybe they need the cash. We got to start having the conversations with people like Doris. We got to have the conversations with people like Dave, so we can start to put a plan together. And that takes more time than I think a lot of people think, or like Dave, you've experienced. Sometimes we have to work to help to get those buyers in the position that they want to be in, so that they can purchase the home that they want to purchase. So they don't need to make concessions where they're not comfortable. So I say the sooner the better. And to answer the other question too, about advice on how do you choose a tax person? How do you choose a realtor? How do you choose a lender? I think we can all agree that local is better, because all the rules are different in all these different states. Different cities are different. So different regions are different. But it really, to me, is a relationship. It's about communication. Are they willing to educate? Are they willing to do what's in your best interest? And be with you during the whole transaction. I know that Trey and I do business very similarly. And this is like, it's a relationship for life. So it's who can communicate on your behalf, who really holds your best interest in mind. And they're interested in having a relationship with you for life, not just for a moment. And I know that's why all of us are on the call. We do business very similarly too. So I think that answers, I don't know, Dave, what do you think about that, when they should have the conversations as a lender from that side of the house?
Well, I think to echo Trey's point, the sooner the better. You can never be too soon to have those conversations. And the idea of what you're trying to accomplish is we're trying to set a strategy of, when I'm ready, what is this going to look like? So we talked about contingent buying versus non-contingent buying. In this market, it's going to be 99%. You have to make an offer non-contingent. And for the people that are not familiar with the term, it's that I am in a position financially to purchase a new home without having sold my existing home if I'm a move-up buyer.
Mm-hmm.
And that contingency is, or that non-contingent offer is because you have the income to qualify for both payments, and you have the cash or funds available for the down payment to buy that new home. Now and that's where Doris will eventually come into play here, because if the homeowner can qualify from a payment standpoint, that's one component. But if they don't have the cash for the down payment, okay, now you have to look at, do we draw money from the existing home via a vehicle like a bridge loan or a home equity line of credit before we start looking?
Mm-hmm.
Are the funds going to come from my 401k? Okay, great. I had better be reaching out to somebody like Doris to find out, if I pull money from my 401k, what's the process? Mm-hmm. What are my guidelines? And where are the pitfalls in this if I do this? And you need to have your tax person ask me that. Mm-hmm. Because you need to know those deals. So getting back to the original question, the sooner the better on all these components. Mm-hmm. The other item that we hadn't talked about was credit. Credit is more important today than it has ever been. And everybody's hyper-focused on credit. You need to know what's in your credit report. Annualcreditreport.com is a great way to start. You need to know if there's errors on there. You need to know what your credit scores are, because the lenders are going to pull it at some point, and you don't want to be late in the game and find out you've got an issue that all of a sudden now your Apple Card has been turned upside down and you need to make changes. So again, the earlier the better, because we can set the table for that. When you are ready, everybody's ready to go. And Tam and Trey, I know you guys are having the conversations with the people you meet for the first time. Have you talked to a lender? Are you qualified? Because I'm too busy to take out somebody that they don't know if they're qualified. Mm-hmm. You know,
Dave, do you think that the requirements for, let's say, your primary home, do you think that the requirements for lending are going to get stricter? Do you see that happening?
They have gotten stricter, and they're going to continue to get stricter, because you're going to see opportunity, and especially with COVID. The reason we've seen some restrictions come into play in the last 12 months is because people now may have lost a job quicker through a downsize or a furlough that they may not have disclosed. And so we're actually gathering updated employment information much later in the process on these transactions to verify that somebody has not lost their job due to COVID, or somebody has not been furloughed, or somebody has not had a forbearance on an existing home, which is a whole nother can of worms, and trying to either refinance or trying to buy a new home. So these conversations all need to happen. And that's where, again, dealing local, you can get the answers to these questions earlier, and you're going to get really good answers.
Yeah, I want to take, this time has flown by really fast. I know we have so many more things to talk about. Can we take a moment to answer some of the questions here that are in the chat here? I wanted to, so let's jump here. Are there more people looking to upsize or downsize? Trey, I was like, I can hop in here too if you want, but
well, so I would say both, but upsizing because the interest rates are so low and people that currently had past mortgages on their homes, they're seeing now that they can get a bigger house for less interest rate for more. And so they want to sell their house that they're in and get a bigger, larger one for their family and pay the same that they paid on their previous home. So
Yeah, I
what
mean,
about-
COVID played a role in that too, right? 100% the interest rates, but because people are spending more time in their homes, they might be at school and at work in their home. They might be in their home all week. There was a time there I didn't leave my house for months. So now the size of your home has become way more important. So I see a huge shift in upsizing. And then that of course means too, this shift away from urban areas where generally speaking, they're smaller square footage. So we're seeing areas boom that may not have been booming before because they have larger floor plans and space. So I'm seeing the same thing. Here's a quick one. What's the difference between an appraisal and an inspection? Trey, you want to answer that one quick?
Sure. So the inspection is any inspection to the property. So it could be, for instance, of the home, of mechanicals, just inspection to check the sound of the property. And then the appraisal is basically, it's just the what they think is the value of the property. And that's what usually your lender will do because they want to make sure they're loaning on what the house is worth. So it's important that they do an appraisal to make sure that what you're paying for the house is what they're lending for you.
Awesome. Hey, Doris, question, two of them for you. We'll do this one first. So, and I know your answers, you always have to make them shorter than they probably really are. Can Doris talk really briefly about the possible elimination of the step-up clause?
All right, that is, I've seen a lot of articles and a lot of talk about that. So the step-up basis, I'm assuming what you're asking about is the step up on death of inheriting property. So there is talk that the new administration wants to get rid of that, which means, for example, I have a client that I'm working on a tax return that they got a cabin from their parents. They inherited it on death. The parents built it for $60,000 and they just sold it for 400-some thousand. They got a step up value at the time of the parents' death because they did not gift. There's a huge difference between gifting before death and inheriting after death. So there's talk of getting rid of that step up. I'm not sure that I can't guarantee anything or any, but I can't imagine that will go away. That would hurt and affect a lot of people. I'm from the country and I'm seeing a lot of it in the aspect of family farms and that have been in families for generations. You would be, instead of getting a step up, they would be paying tax on phantom income, So I can't imagine that would happen, but never say never, I guess. So.
And then another quick one here. I think this one you might be able to answer. For capital gains tax purposes, how is purchase price determined for a home that was built rather than bought? Cost of materials and labor. Do you have a quick answer for that one?
Really quick, it's cost. Yeah, it's your purchases and your labor. Personal labor, if you're doing it yourself, if you built your house yourself and you didn't pay any labor, that is not included. So you don't get to put a value on your own labor. It's only actual cash that you paid out.
Awesome. Here's one too. How is the demand and bidding for homes that need some improvements? I'm certainly still seeing aggressive bidding on those homes. We have lots of investors at play that aren't necessarily purchasing investments that are rental investments right now. I see a shift back to flipping. So the investors are coming in hard and they're buying out our first-time homebuyer market also. So I'm still seeing, I don't think you're going to catch a deal on a house that even needs some work right now because you've got investors at play there with cash for sure. Trey, would you agree with that?
Yeah, as for especially investors, the investors see that because it's low inventory, they want to snatch up the house, fix it up, put it back on market, and make a profit really quick. And they can do
with
that
that equity.
Yeah, they can.
Yeah. Yep, I'm definitely seeing that. What would you recommend to someone who may be ready to sell but not sure about where or what to buy? I would say have the conversation with a professional, right? Talk to a realtor, talk to someone you know, like, and trust that has your best interest in mind. It's not just about a sale. It really is about figuring out what's going to be the best thing for you in your life. So have the conversation. And I just think it's free to talk to us, you know, so just have the conversation, see what kind of shows up from there and where and what you might want to look at. Everyone's, you know, values are different. What they're looking for is different. So it really is just having the conversation.
Hey, Tim, I'll jump in with one quick comment on that.
Yeah.
I think it's important for the people on the call today to understand that it's not what you can afford, it's what fits your lifestyle and what fits your situation. And everybody's situation is different.
Mhm.
So you have to, that's having those good upfront conversations is going to be beneficial for everybody.
Yeah, I love that. I have one last question. Interesting, right? Do you have any insights on the impact of the requirement of all new homes in California to have solar panels? I heard that raises the cost by tens of thousands of dollars. I would imagine that. And do you see that happening in Minnesota anytime soon? If so, are you talking to clients about it? So Trey, I haven't seen a lot of this come down the pipeline for Minnesota yet. I think certainly California is on the beginning parts of those types of trends. I have heard that. I would certainly imagine that it would cost a lot of money on the purchasing and the building, because we're seeing new construction. I mean, the effects of materials, the effects of labor. I mean, that's why new construction home prices are just absolutely soaring right now, is because of material. So I can imagine that would have a huge impact on the purchase price of those homes. I'd be curious if there was some kind of tax benefit, right? Like we have some of those energy efficiency type of things here with solar panels. I haven't seen it happening here in Minnesota or much conversation about it. But again, I think California is just on the front end of that trend for us. So it's something to watch.
There is a 30% tax credit, federal tax credit too, for solar energy. So keep that in mind. I've had a few clients take advantage of that. And it's, I mean, you get 30% of your project paid for, at least on the federal side of it. It's not a bad deal. So
yeah, so that's something to look into. I certainly have more clients asking about energy efficiency and certainly solar panels. It's in the conversation. It's certainly a topic that I think will begin to grow and come up, that it usually starts on the coasts, right? And then kind of comes into the Midwest here. So I think that was the last bit of our questions. Do you guys have anything, last tidbits, anything you guys want to drop in before we start to close things out?
Yeah, I actually do. So, of course, you know, there is a lot of real estate professionals, realtors in the market. And what's important when you're looking for someone, just like how me and Tam, we're taking the time to make sure that we're educating our clients for their best interest so they can make a decision based on their needs, their lifestyle, their goals, and your family goals. And so when you're starting to talk to, and hopefully, you know, a lot of you can reach out to us, but when you are talking to another professional, ask them questions. Ask them questions of what is important to you so that you know that they have clarity about your goals, that you connect with them, and that they can take the time to educate you. Because, you know, nowadays it's easy for people to become real estate agents and realtors, and there's great ones out there. But be careful, because this is the biggest decision of your life. And when you're making the big decision of your life and your family's life, you have to make sure you select the right people next to you to make that decision. And so just keep that in mind when you're out there searching for a professional.
Yeah, Trey, I love that. I think that's always important, but certainly in a market moving like this, and all the changes that are happening with the new administration, like Doris mentioned, it's really important to have the right team on your behalf. I mean, it always is, but I just think it really, really is now. We're having way more complex conversations than we've ever had before, and having them earlier than we had to have them before. So I love that. Does anybody else have anything else they want to add before we close up shop?
Yeah, I'll echo what Trey said, Tam. It is important to have the right team. You want to feel like the people are listening to you and not interested in just selling you something. You know, work with a consultant, somebody that's there to advise, to help, to guide, and answer questions, and then have good communication with you. And I think if you do that, you put yourself in a little better position to not just have success today, but have success down the road as well.
Yeah, I love that. If you know, anybody watching live now, thank you so much for joining us today. And then I know that there's going to be a recording and there'll be more of you watching at home. If you guys have any questions, there's certainly so many things that we could talk on here and talk for a really long time. If you have any additional questions, please feel free to reach out to any single one of us directly. email, call, text. I know we're all available to answer any questions that you guys might have or have some dialogue. So thank you so much, University of Minnesota Alumni Association, for having us with you as well. So I'll turn it over to you now.
I knew this conversation was going to be interesting, but I had no idea how blown away I would be by the amount of helpful information that I learned. I mean, I'm sitting over here taking notes and scribbling down. Thank you so much to each of you, to Tam, to Trey, Doris, and Dave, for sharing your expertise with us. I think that all of the advice that you shared was so helpful and really just highlighted, I think, that main point that you were trying to make at the end, which is that to find people that you can work with, that you trust, and that have your best interests at heart. We will be sharing out a recording of this conversation with everyone who registered today, so you can watch it again or share it with others that you think might be interested in it. When we share the recording, we'll also share the contact information for our presenters, so you can follow up with them and learn more about their work. We also wanted to, again, plug the Gold Legacy Home Program as a way to connect with Tam and Trey. You can learn more on their website at goldlegacy.com. We'll include that link in the follow-up email as well. And then also wanted to highlight our partnership with the Alumni Association with TCF Bank. TCF Bank is our exclusive bank of the Alumni Association. And they're just wonderful to work with. They're all like Dave. They're just wonderful to work with. And you can learn more about their credit card that's exclusive to the Alumni Association at tcfbank.com/goforpride. So on that note, we'll wrap up and conclude today's conversation. And thank you all for joining us.
Thank you for having us.
Thank you.
Thanks, Marissa. Go Gophers.
Go Gophers.
Gophers.